Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we saw the first trading day of August with slight losses across the board. But that was after a really big week last week, Justin.
Yeah, you kind of like to see when it's able to digest gains and kind of hold those gains. So we'll talk a little bit more about the market in a bit, and we'll also talk about a few stocks, namely BJs Wholesale, also EQNR, and Will Scott Mobile Mini.
That we will. All right. Well, first, let's take a look at the major indexes. The NASDAQ today down 0.2%. The Dow down 0.1%. The S&P 500, the hardest hit today, but down just 0.3%. And the Russell 2000 down less than 0.1% to kick off the week. So, Justin, how are we looking in terms of key support and resistance levels on this chart?
Well, I think the biggest thing is the fact that we cleared that 12,320 level on the NASDAQ. That was our highs from June 2nd, and we cleared that last week, a really strong week last week. And that was in spite of the fact that there was some news that could have easily sent the market into a tailspin, a market, just a few months ago that was taking any negative news as an excuse to sell. Last week, it was taking that bad news and kind of just shrugging it off. I mean, you had 2 quarters of contracting GDP. Oh, no problem. Indexes up, pretty well. And if you look at the monthly chart, I mean, this was an impressive month. Huge gains for the month, 12% more than that for NASDAQ Composite. Similar gains for the other indexes too. So July could be a turning point, but there's that question. Okay, are we in a bear market rally? I mean, we saw a very strong March, and that didn't amount to anything except for more losses down the road. So it's too soon to tell. That's the reality of this. That's why we watch the daily price and volume action. We interpret what's happening right now instead of projecting too far into the future. And now we're just going to be watching these levels. We've kind of got this area in March, the lows around 12,550 that we hit. Can we get above that? Can we get above 13,000, then 14,000, and the 200-day moving average line? So there's definitely hurdles that we're going to have to cross here, but we'll just take them one at a time.
And even though last week was the really big earnings week, that doesn't mean that this week there's nothing going on. There's still a ton of, we're still in the thick of earnings season here too. So that could have a continued impact.
Absolutely. You've got not only earnings, but of course there's going to be jobs reports coming out later on this week, and so there's still going to be this data, and who knows? There could be just Fed members kind of talking and kind of trying to tamp down expectations, a little massaging of the numbers that they're throwing out there and expectations to kind of make sure that things don't get too far out of whack in the market. They're really trying for that soft landing, and there's all sorts of data that they're going to be looking at. So as these reports come out over the next few weeks, they don't have a meeting in August, but there is Jackson Hole, and they have been known to make announcements during that. So there's a lot to kind of look forward to here in August in terms of giving more clarity. But again, one of the things that's going to be the best gauge for you on a day-to-day basis is that price and volume action of the indexes themselves and what's happening with stocks. And we're seeing a lot more stocks starting to perk up, and some of the industries that were taking a little bit of a back seat for a while are coming back and showing some strength.
Exactly. Some of those different commodity areas of the market, and with the earnings reports coming in starting tonight, CF, Mosaic, and a lot of other oil and gas names, and so much more reporting over the next couple of weeks. We'll have to see, how that shakes out. Are they going to step back into the leadership spotlight and offer buying opportunities? We'll have to see. Let's take a look at the S&P 500 as well here. So not quite yet getting to its early June high. So that seems like the next stop.
Yeah, exactly. So the S&P 500, really the NASDAQ Composite was the one that was showing its mettle the most. It's the leading index right now. The other indexes were kind of struggling a little bit. compared to the NASDAQ, but still up considerably. But most of those are not above those highs from June 2nd, June 1st, or June, I think it was June 7th or June 8th for the Russell 2000. So they still have a little bit more work to do. But again, you're kind of seeing a similar thing playing out. It's not a problem for these to be a little bit behind, because the fact that they all seem to be participating is kind of giving you a little bit more breadth here, as opposed to this very narrow, oh, it's only the big mega cap tech that's driving the markets ahead, and everything else is just getting destroyed.
Exactly. Okay, let's also take a look at the 10-year Treasury yield coming off even more. So that can only be helpful for the market, right?
Well, yes and no. I mean, to a certain degree, I think a lot of people are looking at this as a positive for the market. When you've got the yields coming down, but you also have to wonder: is this kind of because of fears? Are people trying to move into the 10-year as a safe haven, and you still have this yield inversion, and so there's a lot that's kind of a little tricky about this. And look, I'm no economics major myself. I'm an anthropology major, but I look at this chart, and it does seem like there is a downtrend here, which again is kind of not what you would expect in a rate hike environment that's happening. But it is what it is, and the market's kind of making its call here. So we just have to adjust accordingly. And right now, again, we're seeing strength in equities, and that's something that we just have to act upon.
And we'll continue to keep tabs on the daily action here for the 10-year yield, as we have really all year long, because that's a key part of the discussion, and we will infer from that what we can. But at the end of the day, as you said, it all comes down to the indexes and the health of the underlying stocks, right? What kind of setups are we seeing? And even management's interpretation of the current environment on these quarterly calls, for example, that can have an impact on the reaction to the quarterly reports. So something we're continuing to watch. And next on our list, let's take a look at some sectors. So here's a look at XLE in the energy space, coming off a little bit today, a little over 2%, but that's after a strong week last week, where we saw earnings from some of the oil majors, and XLE up 10%.
Yes, and we keep on mentioning that, of course, ExxonMobil and Chevron are together about 40% of the makeup of XLE. And, you might look at this and say, well, gosh, isn't this like a short? It came right up to its 50-day moving average line and is getting turned away. But look, if this is something that's turning into higher ground, you would expect that, hey, maybe it takes a break here, but then it's able to power through. And it seems like there's more and more of the stocks in this group, in the energy group, the oil and gas. I was looking at the Growth 250, which is on MarketSmith this past weekend, and whereas we've been struggling to kind of get this Growth 250, it's 33 screens, and it wasn't able to populate with even 250 stocks. Now it's at its maximum of 300. A lot of those names were coming from the oil and gas industry. So I think this is something that is worth watching. We'll talk about a couple stocks that are setting up in this area, but there's definitely more action happening here, not just in oil, but also the gas. You've got a lot of things going on with the natural gas. So I think this is one to watch. Also, we can take a look at XME. Ed Carson was noting today that there's a little bit more action happening here. So you've got this right at its 50-day moving average line, on the verge of crossing above its 200-day line. And, you've got some comebacks happening, and like Steel Dynamics, Nucor, and so on, that could be showing, hey, the commodities are having a little bit of a comeback. They've been in the doldrums for a little bit, but that doesn't mean that they're stuck there. That could just be a break and a setup for another run.
And we also want to take a look at chips. So here is SMH edging up today. A nice week last week. First time that it got 4 weekly gains in a row in a very long time. So that somewhat significant, and more chip earnings reports due. And of course, you have all this kind of political kind of angle to it as well happening that might be a bit of a wild card, but for now it's been a little bit of fuel to the fire.
Yeah, absolutely. And so here again, you could have been looking at this as when it was just a few weeks ago getting to its 10-week moving average line. Hey, is this a short? But right now we're powering through that. And tech has certainly been leading. We talked about the NASDAQ leading. You could also look at IGV, which is software. That's another area that the chart is looking much better. It looks like it's on the verge of crossing that 300 level, back above its 50-day moving average line. So they're not out of the woods yet by any stretch, but they are improving. They are showing strength. And still, the NASDAQ has been powered by a lot of these kind of stocks that were beaten up a lot. So that's kind of what's driving things. And, as we talked about, the 10-year treasury yield coming down does help a lot of these higher valuation stocks a little bit more. But before we get too excited, I do want to just mention that XLP, which is your consumer staples sector spider fund, that's also setting up. So it's not like there's a defensive bent is completely getting removed from this market. You've got this kind of clearing its 50-day and 200-day moving average line recently, and the 75 level that seemed like it was kind of an area of resistance. We broke above that today, and this was the strongest sector today.
Something to keep in mind there. Okay, well, let's take a look at some individual names like ticker BJs Wholesale here with Costco, which we've been talking also about lately. But this is a stock that we've been keeping track of the double bottom setup. It almost broke out above 71, pulled back, found some nice support, and now a bit of a pop today in the heaviest volume in a number of weeks, Justin.
Yeah, I really liked what the volume looked like, and there were a few stocks that were setting up in a similar way. I mean, Ollie's, which we've also been talking about, OLLI, that also was, getting support at its 50-day moving average line. That bounced up. Dollar Tree, that kind of bounced up a little bit earlier, DLTR, off of its 50-day moving average line. Dollar General. So you've got a lot of group confirmation here. But what I liked about BJ's today, and one of the reasons we added it onto Swing Trader, was that volume was there kind of at the start. It was crossing this downtrend of this handle. I actually like that this added that handle to the double bottom instead of going straight through there. And you know what? If you could just go ahead and click on that related information real quick and maybe go to the owners and funds, you kind of see that this does have quite a bit of sponsorship from our IBD mutual fund index owners. So that's something else that's kind of giving this a little bit of extra weight. A lot of sponsorship there.
We like to see it. Okay, and next on our list, let's take a look at EQNR. In the oil and gas sector. This is one of the integrated companies. A strong week last week, has earnings out of the way, but the weekly gain coming in at a little over 12%. So is this a double bottom that we could soon see a handle on?
That's what I'm hoping. So, here again, we stopped just short of breaking out of that double bottom, and today was a pause. And if we could continue to just pause a little bit here, that could set up a handle. This stock looks really gappy, but that is because it's an ADR. It's actually a Norwegian company, and look, this is another thing on the geopolitical stage. You've got Russia with what are they going to do with the spigot of natural gas for Europe? EQNR is could be something that helps alleviate some of those pressures if Russia decides to do stuff there. It's very heavily involved in Europe, being from Norway, and so you do see a gappiness here, but that's just kind of a reaction to the trading that's happening in other indexes overseas. So that doesn't bother me. The fact that it came up to its double bottom buy point, if you just think of 38.80 as being that typical buy point, it came right up there. If we could just pause here a little bit, pull back on lighter volume, and then show a breakout similar to what BJ's did, I think this would be a good setup. And should also note that this was on Stock of the Day today.
Yes. So check out that article in our Stock of the Day section at investors.com in the homepage. Quick, easy link to it on the homepage of investors.com. Definitely check that out. And last but not least, we want to check in on WSC. which there's a little bit of a theme here, Justin, with double bottoms.
Yeah.
And WSC breaking out of one with its earnings report due in just a couple of days.
Now, I hate when this happens. You got a breakout and you've got an earnings coming out in 2 days. I think this is Wednesday after the close. But in doing some of my industry analysis this past week, it did seem that one of the areas that was showing up was a little bit more of the building and construction areas. And while this is not in that group itself, WillScot Mobile Mini, what they do is they have these modular, spaces that they create, a lot of times at construction sites where they're doing the planning, where the, contractor is going to sit with the plans and kind of go over things. So WillScot, Mobile could be benefiting if there is kind of a pickup in construction and building. And so again, I like the double bottom look. I don't like that it, kind of got above that level early. I would have preferred that it happened after earnings, but if it can hold here and then you see earnings act as a catalyst, it could still be viable. But a little bit of a pause here would be great. This is one also. You know what? Let's go ahead and go to that related information again. If you go to that owners and funds, this is another one that does have, and it's just one, but you can see that this has really had an increase in that ownership in the last quarter. So that's something that is going in the right direction. Good setup and some pretty solid numbers. So I think this one is worth watching, as is a lot of the building and construction names right now.
Okay, Justin, thank you so much for that. Before we go, since it is earnings season, let's just go check in on a couple of stocks out with their reports tonight. So here's a look at DVN, Devon Energy, up a little bit, even though it beat views, down a little bit. We also have Fang Diamondback Energy, also down fractionally after its report. But on the upside, we have Arista Networks, ANET, up 8% after issuing its quarterly report, and Monolithic Power, MPWR, up almost 5%. So your thoughts, Justin, on the early reaction to some of these earnings?
Well, right now it just kind of shows that the strength in tech is something that is continuing. So whether it's chips or the computer networking, tech is making a showing right now, and so you can still be sitting on the sidelines to a certain degree, but I think the market has been kind of suggesting that more exposure, don't chase things, but I think tech has been showing itself that it's got some more strength here, and so how long this lasts, I don't know, but I think it's worth doing some at least short-term trading in this area.
Mm-hmm. And we're not saying go out and buy these stocks moving on earnings, because first, after hours action doesn't always translate to the following session, but another potentially good green shoot. But we'll have to see how these stocks hold up tomorrow, and a number of the other names that issued their quarterly reports, because it could be a source of buying opportunities, as we saw with the what Enphase did and how some of the solar stocks. There was other news, of course, too, in addition to the earnings news. But
again, the politics, right? Yeah. The bills that are coming out, sure.
Exactly.
But
we'll have to see.
I mean, to that end, I mean, one of the things that people can do is instead of just buying in the pre-market or even buying at the open, just take a look at that first 5-minute bar. Sometimes that can give you a little bit of a gauge of direction for the market, and then, beyond that, you can even look at the first 30 minutes, what does it do? And is it able to kind of make highs from the first 30 minutes? Or is it something that gets turned away pretty quickly? So, I mean, Li Auto, today, a lot of those companies were announcing deliveries. It looked very strong in the first 30 minutes, but it was a very wild 30-minute bar, and it never really crossed above that level the rest of the day. It just kind of pulled back for the rest of the day. So one to watch, but it's certainly, if you saw that volatility at the beginning, you could have kind of avoided a steep sell-off rather than chasing it.
Exactly. Yes, those intraday charts can really come in handy with pinpointing those proper buys. Thank you, Justin. And thanks, everyone, for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us, investors.com/IBD Live, for all the details. We have weekly special guest David Ryan joining the crew, so you don't want to miss it. We'll see you there, and we'll also see you right back here tomorrow at the close. And we have our scorecard webinars this week, leaderboard and swing trader on tap for Tuesday and Thursday, a half hour after the closing bell. So we're looking forward to chatting with you all there. Thanks once again for watching, and we'll see you back here tomorrow.